Is the rapid rise of Bitcoin the start of a new gold rush? People all over the world are interested in and investing in cryptocurrencies, which have become very popular very quickly, like the gold rush in the past. Bitcoin has caused a frenzy similar to a modern-day gold rush thanks to its decentralized nature, blockchain technology, limited supply, institutional acceptance, and growing user base. There will only ever be 21 million Bitcoins in circulation. The comparison to the gold rush seems more and more appropriate as Bitcoin's value continues to rise, hitting over $60,000 and with predictions going as high as $600,000 by 2025. The allure of Bitcoin lies in its ability to change the way money is handled, changing how people think about money and investments in a time of innovation and decentralization. Bitcoin ETH surge. The speed at which money is coming into Bitcoin ETH is truly amazing. In just 15 days, US Bitcoin ETFs raised more than $25 billion, which is about the same amount of money as Barrick Gold, the biggest gold producer. Because of this incredible increase, ETFs now have the second most assets under management of any type of US commodity ETF. This makes them the new digital gold. Some well-known people in the Bitcoin world, like Adam Back, are paying attention to Bitcoin's meteoric rise. Back is very sure that Bitcoin will be able to beat gold and become the most popular ETF product. This feeling fits with the lightning-fast rise of Bitcoin ETFs, which have gained an amazing $28 billion in a very short amount of time. Democratizing investments. People see the launch of spot Bitcoin ETFs as a major step forward, similar to how gold ETFs changed the world in the early 2000s. Spot Bitcoin ETFs are changing the way people trade by making it easier for everyone to get into the volatile world of digital assets. This is similar to how gold ETFs changed how people could access precious metals. This is not just a new financial idea, it is also a big step toward making the cryptocurrency area more open and accessible to everyone. Spot Bitcoin ETFs are breaking down barriers that used to keep people from participating. They give a wide range of investors a safe and easy way to spend their money. This opens up new ways to trade and speculate, and it also gives investors the power to actively participate in the growing cryptocurrency market, similar to how gold ETFs made it possible to diversify in the precious metals market. Bitcoin is trading at $42,192 on the daily chart right now. This shows how digital assets are becoming more and more accepted as legitimate investment choices. Bitcoin ETFs challenge gold's dominance. Amidst the current financial shifts, an insightful perspective suggests that in the face of an economic downturn, the traditional role of certain assets may evolve. As our world increasingly embraces digital transformation, there is a notion that certain assets, once considered secure, might appear lacking without the incorporation of newer digital counterparts. This concept sparks reflection on the changing dynamics of the global market, where the rivalry between digital assets and conventional safe haven investments is reshaping the very essence of wealth and value. It highlights a paradigm shift that challenges established norms, urging a reconsideration of what constitutes valuable and resilient assets in a continually evolving economic landscape. Even with these great steps forward, Bitcoin ETFs still need to go before they hit the $250 billion that investors know they have in all precious metals. Still, experts in the field are still optimistic about the possibility for long-term growth in the world of digital assets. This is because more people are using cryptocurrencies and the way global finance works is changing. Changes in investment preferences. The rise in Bitcoin ETFs is a sign of a bigger change in how people want to spend their money. Investors used to be interested in gold because it was stable and easy to hold. Now they are interested in digital assets because they could give those returns and flexibility. The fast-changing world of cryptocurrencies is putting pressure on gold's traditional appeal as a safe asset during economic uncertainty. People have long thought of gold as a way to protect themselves from inflation and keep their money safe. Because of its historical value and widespread acceptance, it is a safe investment choice for people who do not like taking risks. There is, however, a paradigm change happening because of the rise in Bitcoin ETFs. Investors are becoming more open to exploring other ways to protect and grow their wealth. Due to its high value and limited supply, gold has been able to withstand ages of changes in the economy. Bitcoin's rise as an autonomous and borderless digital currency, on the other hand, adds a new dimension to the idea of a store of value. Bitcoin is appealing to a generation that values financial independence and freedom because it is digital and there are only so many of them. Bitcoin's skyrocketing rise. There is no denying Bitcoin's meteoric rise, both in value and investment interest. After the financial crisis of 2008, people came up with the idea of Bitcoin. It has grown from a small-scale experiment to a widely recognized asset class. Bitcoin ETFs have sped up the process of joining regular financial markets, giving investors access to the market without having to deal with the hassles of owning and protecting Bitcoins. The fact that $25 billion poured into Bitcoin ETFs in just 15 days shows how quickly digital assets are becoming popular and accepted. Bitcoin has become known as digital gold thanks to this influx of funds, which also makes it a strong rival to traditional security assets. Taking a look at gold and Bitcoin ETFs. To get a sense of how big the move from gold to Bitcoin is, it is important to look at how gold ETFs work and how Bitcoin ETFs are changing. When gold exchange-traded funds first came out in the early 2000s, they made investing in the valuable metal easy and quick. Investors can buy and sell shares on stock exchanges, which gives them access to gold that was previously out of reach for regular investors. When gold ETFs came out, they made investing in gold easier for regular people because they did not have to deal with the problems that come with having and storing physical gold. By including gold as a strategic asset, it also made it possible to build a wide range of financial portfolios. Bitcoin ETFs. With Bitcoin ETFs, investing has changed in a digital way. There are real reserves behind gold ETFs, but Bitcoin ETFs just track the price of Bitcoin. Investors do not have to worry about the complicated storage and security of cryptocurrencies. The fast flow of money into Bitcoin ETFs is due in part to how easy it is to trade and access digital currencies. ETFs have made Bitcoin more accessible to everyone, just like gold ETFs changed the way people invested in valuable metals. It lowers the barriers to entry, so a wide range of buyers can join the cryptocurrency market without having to deal with the technical issues that come with owning and protecting digital assets. The role of rules and participation in institutions. The popularity and success of Bitcoin ETFs show how important law and institutional involvement are becoming in the cryptocurrency space. The rules and regulations that govern cryptocurrency have had a big effect on their popularity. The launch and approval of Bitcoin ETFs in the US, a market known for having strict governmental oversight, shows that digital assets are becoming more accepted within established financial frameworks. Knowing that their investments are subject to monitoring and compliance gives investors a sense of security. This increased legitimacy makes more people see Bitcoin as a good investment, even conservative investors who normally would not do that. Possible effects on gold. People might see Bitcoin's rise as a threat to gold, but some experts see it in a more complex way. Gold's role might change instead of getting smaller. In the event of a possible economic slowdown, gold and Bitcoin may work well together to make a stronger plan for protecting wealth. From this point of view, both things have their own special qualities. Through its historical value and physical form, gold provides a sense of security during uncertain times. One thing that Bitcoin does differently is that it is decentralized. Trades can happen across borders, and there is only a limited amount of Bitcoin available. When these two assets work together, they could offer a more diverse way to protect against economic uncertainty. What do you think of our video? Let me know in the comment section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.